All right, I think we can start. No problem. Let me just look into these charts and let me just see the GBP AUD, yeah, GBP AUD as well. Now a lot of movement, just to share with you guys, a lot of movement before anything else, I just want to welcome you guys and welcome to today's webinar. Today is the 6th of July 2016. It's the live Wednesday's webinar. Okay, so yes, as of market open, we had a lot of news today about dropping bond yields and a lot of potential of a rise for the JPY. I'm just actually going through some of the fundamental and news coverages today. Okay, and the reason is so we've got this Brexit still going on, and it has actually become more intense due to the time. It's been already almost a week or about a week since the referendum was announced, Brexit was announced. So they are closer to making lots of I wouldn't say making the decisions, but they have to be closer to using the Article 50 to activate that Article 50 and to really have the decisions, solid black and white, so that has actually pumped in more interest to the JPY. Okay, it doesn't mean that the JPY or Japan's economy is doing really good. It's got this safe haven sort of criteria or characteristics of the JPY. Now the JPY, Japan itself, majority of Japan's economy are run by hedge funders as well. So the economy out of many countries in the world, it's got a very unique financial, monetary and fiscal system. Okay, so it does a lot of investment overseas. Loads of Japan's investment are, in almost every industries worldwide. Okay, so hence the reason you need to understand that when there is a crisis happening in Japan, usually you've got money flow coming in. Okay, you also will have money flow coming in, not only because of the safe haven characteristics, but you would need to understand that if at all there is a crisis or even a act of nature like the tsunami, earthquake and all that, you'll find that the Japanese yen would be going up instead of going down. So this is really important for you to know that, because they do their risk aversion by selling their overseas assets, shares of overseas assets, so the money would be flowing into Japan. Okay, so this is one of the strategy that Japan uses. So at the moment we have got quite a number of how do you call that, signals revolving Japan's yen. Okay, yen is expected to go up. There's a lot of room for yen to go up. So it is going to be hurting the economy really badly, because it will hurt the export side of things, because things are going to be more expensive, rates are going up. So it's not a good thing for Japan's economy, but due to what is happening with Brexit and everything else, it sort of forces more buying signals for the Japanese yen. Okay, now as you guys know, I have also mentioned about Euro GBP. I just want to go through some of the signals that I have covered as of Monday as well as last week. As you guys know, I have mentioned about Euro GBP on Telegram, on WhatsApp as well, and mentioned about the potential of Euro GBP to go up to the 0.8800 area, and now it is at the 0.85. Okay, it was at the 3 area, I think. So you've got 200 plus pips appreciation from the time I've mentioned it. So that signal was produced or given by Citibank's group of analysts, and they were looking at potential patterns as well as what's going on revolving Brexit and the movement of cash flow by investors, real money, leveraged money and all that. And it pointed out to be good potential to buy the Euro GBP, and it is actually still showing a lot of movement to the upside, as you can see, and I want to cover that because that is literally happening at this moment of time on a live market. So you have got Euro GBP on a daily chart. Now I've drawn that ABCD, as you can see here, and it is pointing to the let me just do that on a different area. As you can see, you've got 8670, 86800 area using that pattern there, 8670, 8680. Okay, so 8670 is an ideal take profit area if you are buying. Okay, and then you could re-enter again at 8690 and take profit further up, okay, because it's got a lot of room at that area there. Of course, the banks are giving us a bit of a hint that prices for the Euro GBP could reach at the 0.8800 area, but we don't want to take profit exactly on the dot of the 8800. Why? Because 00 is your psychological area, okay, your psychological numbers sits there. So we would like to take profit before it reaches there, and as you can see, I've drawn that zone as well. So that is that zone there between 8680 and also 8800, based on that very long-term chart, gives us a resistant area, as you can see. But if you are wanting to take profit just before the 8800, it's probably better at the 8790 area. So it's about 10 pips below the 00 area. It's probably safer. But we're talking about not so much long term in terms of months, because that is probably just a couple of days or within a week that it would reach the 8800, even possibly by the end of this week. Okay, so yeah, take that chance, you guys who would like to trade the Euro GBP. There's still a little bit of room, perhaps about 150 to almost 200 pips more left in order for us to safely take some profits from this move of the Euro GBP. Okay, so just very quickly on the 5 minutes chart, as you can see, we have got, now I would like to give you a bit of a hint as well. When you're looking at charts from a different time frame, or you're monitoring different time frames, you would like to also look at possibility of how the candles are moving. What I mean by that is, let's say for the Euro GBP, if I go on to the daily chart, okay, now look at how you get longish strong candles moving, right? And then you go on to the weekly chart and the monthly chart, and then it again signals or it gives you a hint of how strong the market is. As you can see, longish bullish candle. Okay, but then when you go on to the 5 minutes chart, it doesn't really give you that sort of idea that the market is dominant by the buyers. Okay, but this is a good sign when you look at the daily chart, the weekly and the monthly, and it gives you bigger bullish candle, and that is actually a sign of it where the market is still poised to the upside or the downside strongly. There's still a lot of room. That's all based on how the candles are moving on the longer term. Okay, this is a good tip for you guys to keep in mind. Okay, you can Tendai, but you know, I would like you to ask yourselves as traders, if I were to enter, have I actually noticed the trend? The trend is at this stage, yes, it is on the upside for Euro GBP. So your next question should actually be, what would be a good long price be? Okay, so you would need to adjust your price that you see now with what you call that, the psychological level, as well as look at whether or not you have noticed any close by support resistant area as well. Okay, let's do that together. Let's say for the Euro GBP, right? Let's look at price first. On the right side, the price sits at 0.8545, correct? So 45 is only about 6 pips away from the psychological number of 50. So the answer to your question, Tendai, is it's probably best for you to enter along not now, but above the 50 by 10 pips, meaning to wait and see, wait till prices go up to 85.60. Okay, because it's a little bit too risky at the moment in terms of price action. Okay, it's too close to the 50 site number. So let it actually play around the 85-50 area, within that area, but let it go above 50, like let's say 60 onwards, and then yes, at 85-60 would be a better price for you to enter along. Okay, not at 85.46 or 85.45 as the price now. It's a little bit too risky. Okay, apart from that, you would need to, if you can, zoom out and look at areas that could potentially be resistant area. Look at what we could see now together. Now I'm on a daily chart, and I just want to look at, okay, let's say yes, there are potential, as we've mentioned, about Euro GBP going upwards, correct? But look left and look at where potentially the resistant area were, or where the bears have actually been has actually been in control in the past. Okay, this is what's important. So if I zoom in a little bit to that area, as you can see, we have got various strong resistant area. Okay, so let us choose one of these peak to actually draw a nice resistance zone. Okay, let's say we're taking that one here. Let's say we're taking that one here based on that one. That one there, based on the middle candle, I will take that zone based on the middle candle, the body of the middle candle, and then the wick of the middle candle. And I can see that if I look left further, I could see that that is quite a good zone, because I have got a turnaround of price there with a longish candle, but I've also got a nice start of a downtrend there as well, as you can see. So that zone here, it's quite a good zone. Let's just mark that. Let's see. Let us just zoom out. So that's where we've marked that just now earlier on. I just want to take that off first. Let's just take the last one just so that we don't get confused. Okay, now I'll just do that. Okay. Give me a second, guys. Okay, so there you go. I've marked that there. Okay, so we have got prices at this zone here between 8679. We can say it's 8680 and 8688. Okay, so between 8680 and 8688, there's a resistance zone going about there, so you would need to be careful with that area. Okay, so let's say you're buying at 85.60, and it's probably best for you to exit as well before that strong resistance zone at 86.70. Okay, so you've got 85.60 to 86.70. So that's quite a nice area for a buy and take profit zone. Okay, so this is where you can actually have that as your potential trade idea for the Euro GBP. Okay, Tendai, good. All right. So to answer that one, we've done that to Euro GBP. Now let's go back to the Euro USD. Now Euro USD, it's quite an interesting pattern. The Poland flag. Okay, this is the pole, and that's the uptrend, or the movement of candles upwards within this channel is your flag. Now it has actually broken out of it, as we've mentioned, I think on Monday. That was a potential flagpole pattern, and it does look like it has actually broken out, and you can see it broken out quite strongly. Why I say strongly? For two reasons. One is it has actually broken out with a significant long strong bearish candle, and secondly, it has actually gone through or pierced through the 50 exponential moving average, as you can see there, and that's a good sign. So it broken out with a long candle, a strong candle downwards, and it pierced through the 50 moving averages, moving average. So that actually gives us an idea of a stronger control by the bears or by the sellers, because you have got more candles under the 3 lines as well. So now prices is trying to make that a little reversal upwards. Okay, but let's look at the price. Now what I'm looking at, if at all this is a successful pole and flag pattern, which it does look very likely like it may be so, what usually happens is if it does come up here, okay, it might then visit the channel again and then make a downward move. Okay, so this is what you would need to understand, that this is a bit of a norm for prices to do that once it you know, breaks out of that flag and pole pattern. Okay, but let's say if I pull a Fibonacci from there, okay, from the top there down, I just want to look at potential areas where prices could go up and bounce back down. So we have actually talked about how prices could potentially go up to that area there. So if it does go upwards, you have got the 88.6 area, 78.6 area as well. So there may be room for it to go up, but that's only possibly a correction, or most probably a correction only. Okay, let me just take these prices off. Now, so what if you want to sell now? If you do want to sell or short this based on this bearish pole and flag pattern, then your entry could easily be right after it broken out, and adjust that price to the psychological number and take that trade. Now if you are asking how far could it actually go, then it would actually go as far as many pips as this pole here. So this pole here is from the body, let's say roughly right down here, you have got about 400 plus pips. So from that top, you need to take from that top of the highest price in the flag down. You calculate it that way. Okay, let me see whether I've got any formulas that I have actually done. Give me a second, guys. Let me just check whether or not I've got. I think I've okay, there is a formula that we can also follow, but I'll type that out for you in a bit. Okay, but to make it easy to understand how you forecast the take profit zone, you can very easily treat this like an A, B, C, D pattern by taking that pole from body to body, let's say, just as a rough idea, and take that from the price, the highest price there on the flag. Let's take that one there, okay, and make that equal. So here you go, you have got that price. So the potential for Euro USD to fall further would be at approximately 1.067 one area. Now based on that flag and pole pattern, when I look at some of the forecast or trade ideas by major banks, it seemed to they seem to also mirror that as their forecast. So they have also forecasted to be at the 670 area, some 680, so it's quite close to where we're looking at price now. Okay, so best thing to do is, if at all you are adjusting Euro USD price, let's say you're selling and you would wish to sell, it's probably best not to sell at this very moment of time because of the price. You are looking at the price at 1.1081, so 1.1081, it's not a good price to sell because it is bang on the psychological number of 80. Okay, as you can see, it's 80 now, right? So it's you can see prices, behavior of candles as well. They're just you know, playing about or contemplating on whether or not to go down further or not, usually very close to the psychological level, and then at some point they have decided, only then it will move faster. Okay, so now it's pausing, it's, you know, playing about 1.1081. so the best ideal price to enter would be under the 80 by about 10 pips, let's say, so 1.1070. okay, would be an ideal selling price. Not exactly now, because it's quite unsafe for you to do that, because it's just at the psychological level. So if you have entered that at 1070 and you would like to take, you know, the maximum you can, mirroring the pole, the size or the amount of pips of the pole, then you can use that number as your guide, your price at 10671. But 71, if you look at it above it, it's got the 80 side number there, so it's probably best 10 pips above the 80 to take profit before this area. So 1.0690 would be an ideal take profit area for the Euro USD on the downside. Okay, so 1.0690 would be an ideal take profit area. Okay, 690. Yes, yeah, it's quite a nice space there, room for your take profit or number of pips to benefit from to the downside. Okay, so that's basically it for your Euro USD. I'm looking at the 4-hour chart at the moment. Let's look at daily chart, what's going on. As I've mentioned earlier on, if you remember, when you look into bigger or longer time frame, if it shows you bigger candles, then it's a good sign. As you can see, you got more power there. You've got bigger candles there, more powerful candles, longish candles to the downside, and you can see that the push breakout is actually quite good with a strongish bearish candle there. Okay, and then if you go on to the weekly chart, I still see longish candle on the downside. The good thing as well is it's under prices under the 3 moving averages, as well as the monthly chart is far under all 3 moving averages, and then you've got the 4-hour chart. Let's look at the 4-hour chart, and indeed it's the same, under all 3, and it's only the 1-hour. Let me just check that again. The 1-hour chart as well, it's not too bad. It's still under all 3 lines, but it's trying to test the 50 moving average at the moment, okay, which is only natural for it to do so upon breakout, for it to correct very close to that area of the channel that it broken out from, and then come back down again. But overall in the Euro USD, it is signaling a lot of bearish momentum. Okay, now from one of the banks like Credit Suisse, let's say, they've came up with just you know, a signal for Euro USD bearish momentum or bearish signal just about an hour ago, and they are, you know, because they release signals, and a lot of other banks do that as well while the market's moving, and they have been consistent on Euro USD's bearishness, and they are talking about, majority of the banks, majority of experts as well, they are looking into more risk lower, okay, lower to the 1.1020 area, 1.1020 area. That's another psychological level. So now we are at 1.1073, so 7020. We've got about 40 pips or so. Okay, so that's actually a good thing. And then if it does actually go lower than 1020, let's say 1010, under the 20 psychological number by about 10 pips, then it may actually even go as low as the 1.090 area. Okay, 1.0910 area or 1.0900 area. Okay, that's sort of a summarized area that the Euro USD could potentially reach, summarized by majority of the banks as well. And looking at the potential from a patterns perspective, from the technical perspective, it sort of mirrors and matches with what the experts are saying and what they're looking at. And I try not to just listen to what the banks are saying and straight away place a trade. I try to do the analysis myself and marry them up together. I would like to also look at some fundamental aspects of Euro USD as well, and what's going on in terms of what do you call that, the trades or anything revolving Brexit and things like that. Okay, but as of now, there is a lot of downside pressure for Euro USD. Technically, of course, there's some challenges of the 38.2% retracement of the Fibonacci ratio and all that, which we don't need to worry of it at the moment, because I've done the due diligence in looking at the patterns and using Fibonacci as well, but we can see a good match between technicals and fundamentals at the moment, signaling downward momentum. So that is actually quite a good sign as well. As I've mentioned, you've got a pole and flag pattern, and has actually broken out, and it's correcting to come back to the pattern, but still it's got more room to the downside. You've got obstacles here for Euro USD from the 3 moving averages as well, so it might actually just go up and get challenged by either one of the lines or all 3 lines, and then start coming down at the last line, or in the middle with the 100 moving average. That's the part that we cannot say for sure, but I want you to look left as well and look at where you would find a biggest resistance as well. As you can see here, you see now where prices are. If you look left and look left, you've got a support area here, okay, got some resistance here, but you've got quite a major resistance in this area here, okay. This is where the gap down was. There's a downward trend here and downward trend here. So if I were to make that zone based on here, that candle, that bearish candle there, and then there, that's your zone on this 2 line, 1.1068. You see, so once prices go under the 1.1068 and lower, then you've got more downward momentum. So now it's just challenging that between that 2 line, basically trading in between that resistance and support zone. Okay, I think I've got some question here. Teboho, I don't actually go through the sites for bank reports. I communicate with some bank traders, so we share information and we educate each other. So I've got a network of traders who share some of the information. They're highly confidential, and I as well share some patterns with them, and we sort of share ideas, and then I share with you guys. Okay, so I don't have a particular site on the bank reports. I just have some signals coming from my contacts and networks within the banks. Okay, most are bank traders. All right, but of course, if you want to have a snippet of some of the banks, you can go to EFX News. EFX News is one of the sites that actually get these bank reports, but they may not be, they are more for commercial use. So like EFX News, they sell subscription as well to companies as well as retail traders, but I try to get the reports through friends and contacts within the banks who manages a huge portfolio for clients, and they usually get the reports from their inner analyst, and they do their own research. So they're managing huge portfolios within the wealth management department. So this is a key area that I try to provide through Orbex to our clients. Okay, so I'm trying to get more quality institutional type trading signals. I try to digest it myself and tweak it a little bit so that it would be more, it would be easier for you guys to understand and to trade it and make money from it. Okay. All right, good. So that's for Euro USD, guys. Any questions on Euro USD? That's just an idea for you guys that it may actually go lower, but now it's in a corrective mode where it might actually challenge that channel area. Let's go and look at what's going on with the GBP USD. As you know, we've got Carney, the Bank of England Bank of England governor as well, has actually given lots of signals to the downside from what he was saying in the stability report and things like that, and there's still a lot of room to the downside for pound due to the instability, due to the prolonged uncertainty in Britain. Okay, it's a lot of political shifts, economic shifts, a lot of shifts going on in both the fiscal monetary policy as well of the UK. So this is giving a lot more room to believe that the downside would be preferred for now for the GBP. Okay, and of course we have got the more news, as you guys can follow on what's going on with Brexit as well. Okay, but if you're looking at technically, again, I'm looking at a daily chart at the moment, but if you go on to the 1 hour chart, uh, we do have a sort of a pole here going on, but not a very clear, nice flag. You've got a nice flag there, but the way the breakout occurs may not be very clear. But still, it may be a valid. It could potentially be a valid pole and flag pattern, a bearish pole and flag pattern, as what we have seen on the euro as well. Okay, so that is your flag pole pattern there. Okay, you could take it there or slightly this way. Okay, so it's broken out quite a bit. Okay, it has, as you can see, it broken out. Okay, it came when it came down and then it went back up again. Usually upon breakout, it would test that channel up area and then go further. Now this is the part that we need to be careful with, because let me just, okay, as you can see, you have got room to the downside, as they have mentioned. Okay, most experts, most of the news as well, and a lot of things that's going on within the banks, you could see that there's a lot of room to the downside. And if I take the size of the length of the pole itself, and upon the highest price right there, roughly, that's a potential move downward target at the 1.231 area. Of course, a lot of people, a lot of experts as well, and a lot of reports I've gone through with the banks as well, and they are talking about a lot of possibility to the downside at the 1.25 area. But of course, this is if at all you've got more strength to the downside due to all these political shifts going on internally, as well as what's going on with the banks as well in the UK, then you could see it very well go to the 2.3 area, 1.23 area, or even at 1.2000 area. But we don't want to just leave it all there and just leave it and let your trade run and target too far. It's probably better for you to target one stage at a time, to take it stage by stage. So here, for example, we're looking at the price at 1.2933. Now, if you're actually selling or wish to sell, then you would want the price to go lower under the 20 area, like 2910, and then you sell, and then you can then take profit, about 100 pips or so, and take it in stages between 80 to 100 pips, and take it in stages until it breaks the next psych number again. And you would need to look left as well and try to look at where there are barriers of an upward move or support, or significant support area as well. Is very, very important for you to do that. Okay, so here, for example, we're looking at 12314, let's say, that area, just by using patterns. Okay, but let's look at whether or not we have got any significant support close to where prices are now. It doesn't look like we could see any at the moment, but if we go onto the daily chart, perhaps. Okay, give me a second. I've got questions coming through. That's good. Just give me a second, guys. Yeah, I'll be with you on your questions. All right. Looks like the coast is quite clear for further downward, because there's no, from what I could see, it's no major support zone that that would actually be like an obstacle or a challenge to what's going on now with prices falling downwards. Okay. So let's see. So that's quite a nice one that we can see more room to the downside. A lot of experts are talking about even more room. So we would like to then adjust that with your psychological level. So as you can see, 1.2930 is where prices are. Of course, it's under the 50, but if you want to be conservative, you want to wait till price goes under the 20. So 1.2910 would be an ideal sell area, and you can then target about 80 to 100 pips on that one. Okay, or perhaps you don't want to be overly excited with it too soon and take maybe about 50 pips or so under. All right, that's for your GBP USD, guys. Okay, now based on some of the banks, they have actually talked about GBP USD. Taboho, you've mentioned something about falling wedge. Yes, you can. Yes, you can, Taboho. Of course. I mean, there are a lot of patterns. You can, it's a falling wedge. It's got, chart patterns, price patterns. It's got loads of ways. I prefer the flag and pole pattern for what's going on with the market as of now, because I've noticed that the percentage of successful trades using the flag and pole pattern has actually increased tremendously since November last year, when we had the breakout of gold and all that. Since November last year, since October itself, when I started looking at the pattern movement for gold and silver and Euro JPY, a couple of other pairs as well, the USD JPY, I've noticed that since November onwards, and after Christmas, especially January onwards, we have had loads of successful what do you call that, flag and pole pattern. So flag and pole pattern has been quite a favorite pattern of mine for these couple of months. I mean, that can actually change again for the next couple of months. We never know, but I like to work on patterns based on the timing. I like to look at patterns that perform the best, and sometimes these patterns perform the best for various reasons. They may have reasons of its own on how that pair work and how these pairs work with the economy and current geopolitics and movement of real money and all that between banks and all the models that the banks are using to stabilize currency rates and everything else. So what I can see is, yes, you can call it wedge pattern and things like that. If you match that wedge pattern with the flag and pole, if it's sort of concise, give you an idea of an idea of a potential TP zone, then yes, it would be brilliant. It would be brilliant for you to combine these two and get other patterns and other techniques as well. But always pay a lot more attention with price action, with the price that you are thinking of entering and placing your stop losses and your pending orders, your stop losses, so your take profits and everything else as well. Okay, play around with the price action by being aware of your psychological numbers as well as the significant support resistance zone. Very, very important. Okay, good. That's a good one, Tendai. Okay, so that's one of the questions. Any other questions revolving the GBP USD? If not, I would like to just share with you guys on some of the banks have actually mentioned about resistant areas. Resistance moves towards 12950, they say. Here I'm reading from one of the major bank. It says that a direct break lower can see scope for 1.2570 area. So that was what we mentioned earlier on. What was the price based on the flagpole pattern? 2314. Okay, so we can look at above the 23 area, perhaps something a bit higher, as I have summarized from various banks, would be the 1.2590 area, okay, or 70 or 90 area to be your take profit zone. So you've got a couple of 100 pips maybe, to go downward. So there's a lot of room, close to 400 over pips, perhaps 300 plus. But again, take it in stages, but this is what's going on. The reason why we want to take it in stages as well is not to sort of trade with just just focused on that one movement down and not think of possible risks that may appear, because anything could be said in the news, anything could be decided by the big boys, and suddenly things can change. Okay, so trading in stages by being sensitive with your price, your psychological numbers as well, would be a key area to focus on too. All right. Okay. Taboho has got a question. What is the overall sentiment with pound in relation to the Brexit referendum? We are now post-Brexit. What is going on is more uncertainty. They are more focused into commodities, safe havens, and everything else. A lot of businesses are still suffering. Bigger businesses are put on hold and things like that, bigger contracts and all that. So current sentiment would be more politically driven at the moment. Okay, so that is stirring up a lot of things, and it's strengthening the downward sentiment, the fear sentiment. Uncertainty and fear, you mix them up together, it's got a very funny feeling. That's the funny feeling or sentiment that's going on in the market post-Brexit at this very moment of time. Okay, so this is what's going on with the Brexit referendum. Okay, so that's it. They're close. I don't know how close they are to decide things. They have put a lot of dates and months, like let's say by September or by this or by November. I think it's difficult to put a date and a month to say that this will all end at this time and we will make that final decision, because it doesn't work like that in the markets. It will just, a lot of factors would lengthen that decision-making period, perhaps until end of the year, beginning next year. So as it stretches, as the timeline stretches or dateline to make that decision based on Article 50 and to put down that final thing, the more it stretches, the more delay, the more investors are going to flee and go into safe haven. So that is why we're looking at USD and JPY being areas of investors' focus to put their money in. Now, this is Brexit theater now. The theater of trading revolves around Brexit. Brexit is the main theme. So a lot of ways on how the market used to work with risk aversion, the way they manage risk and everything has actually changed now. So a lot of things have actually changed due to Brexit. A lot of strategies have changed, a lot of risk averse strategy to avoid, not to avoid, but to reduce the level of risk and everything else by hedge funders, by investors, have actually changed drastically. So we cannot really base on history what have had happened with various other bad times or chaos, because it's not the same anymore. Okay, don't follow the same model on what they do, so it's different. Okay, so that's basically what's going on. So we need to play by ear and be careful to marry between fundamental news and geopolitics as well as what you see on the chart. Okay, better not to take a direct hint or trade idea or signals directly from any source. It's best for you to marry them together, make your own analysis as well, and then decide. Not to take too long to decide, of course, and as you know, over-analysis is paralysis as well. That's another challenge, another obstacle. Okay, so you want to be balancing it right the best as you are able. That's the best thing to do. Okay, so GBP USD, and what about USD JPY? Now USD JPY, as you can see, you have got a bit of a corrective move on the 1 hour chart. Let me get rid of this Fibonacci. Give me a second. Sorry. Let's look at the dollar versus the yen. So we are at 101.11. It's a bit of a correction. Where has it landed on? It's landed on 100 area. Okay, 10018 or 19. Okay, 100.19. It's only about 1 pip away from the 20 site number as well. So you see how it reversed and bounced upwards. Now the price is at 10112, and 12 or 13, 11 or 12 would be not far away from the 20 site number 2. So this is another area to watch out for. Might just come back down again. But overall expectation for the USD JPY, it's very much how do you call that, bearish at the moment, and they've aimed at the initially, as of this morning, 100.52. This is 101.8 at the moment, but 152 was their take profit area for the short, but they are also talking about a retest area whereby if at all now it goes up and then it finds a resistant area and then comes back down, potentially it could come back down to the 100 or even lower to the 99.00 area. Okay, so that's basically challenged at the moment with that. Now, be careful with what's going on this week with the dollar, meaning the FOMC, and then what Yellen will be saying, and what the people who are involved in rate decisions will be saying and deciding. Okay, this is the most important thing at the moment. That theme is quite challenging because we have no head or tail of what really could actually happen at this stage, because anything can happen. Because as I have mentioned earlier on, all strategies and models and a lot of things would actually be have actually changed drastically. So it may be something decided for now and then totally reversed and changed again. Okay, so that's USD JPY. Now, for safer trading, it's probably best to look at the Euro GBP and a couple of others. There are traders out there, investors who are looking into safer buying zones, especially for the AUD USD and the New Zealand USD. So the AUD USD, for example, they are expecting prices to, despite what's going on politically, they find that the political agenda may not be affecting the Australian dollar as much, because they have got very good returns in terms of GDP, in terms of exports, as excuse me, as well as their LNG, liquid natural gas sector is doing really well together with the housing sector. But let's look at what we can see. What we can see is, if at all it does actually, if the prices gets dominated by the bears or the buyers, then we may see a potential W-like pattern here with a C to D going upwards. But if we convert that ABCD into a sort of potential geometric pattern, then we would still need prices to go above that axis point, center point here, okay? But that center point is made up of price 7483, which is very close to, give me a second, 7497, sorry about that. 7497 is your middle area. So that is suggesting to me that it's probably best for me to wait till price go above 7510 at least, because 7497 is just too close to the 7500 psychological number. So I would prefer to look at price go above the resistance area here as well. As you can see, look at this area here. Now, this area was a how do you call that, resistance area, but I'll draw a zone based on this little peak price here. Okay, this peak. Now, that's my zone of resistance, let's say. So if once I've drawn that resistance area or that resistance zone, I find that prices is just in the middle of it. Okay, so it's probably best for us to wait till price go above that area. See, 0.7506. So again, adjust that to 7510. So 7510 would be a more ideal area to find that prices would appreciate better. Okay, the area. So not yet, not just yet. Wait till price go above 7510, or better still, above 7520, closing into the 7530 region. Then you've got a little bit more confident. But if at all it does actually appreciate further, then that's the potential right up there at the 77 area. So you got almost 200 over pips gain there. Okay, if at all you're entering 7510, let's say, or 7530, you've got loads of room to find your TP at that area there. But again, you got 7785, so it's probably best at 7770, 770, your TP area. Quite a interesting number. 0.770 as your TP area if you enter at 7530. Okay, that's an ideal sort of area to consider both your entries and exits. Okay, all right. Now I think I've got some question. Let's see. Teboho. Okay. How do we know? Teboho is asking, how do we know how the talks will affect the overall trend of a pair? That's a very good question. It does depend on what talks you're talking about. If at all there are talks revolving the Brexit, one good website I can recommend, you guys probably know it already, is your theguardian.com. Okay, I will show you what I mean. Let's go there together. Now, if you type in, let's say you want to know about talks and things revolving Brexit and what people, the big boys, the politicians are saying and what's going on at this moment of time, then you can go to The Guardian. Okay, The Guardian here. All right. Okay. Once you go on to theguardian.com, then you could click on business. Okay. And when you click on business, you've got this rate like page, rate like area here, and it says live. Okay, this is when you've got all this live coverage on Brexit and what's going on at the moment revolving Brexit. So this is where you can easily find all the talks and all the latest information about what's going on with Brexit. And like now, for example, you've got 11 minutes ago, you've got weak growth in U.S. service sector, give you a little bit about what's going on there revolving the service sector, but then you've got a bit of a snippet of what people have said or mentioned that have actually created a bit of a shake in the markets, for example, because when somebody important speaks, then it comes out on the news, then you've got the news and the media blowing it out, sometime out of proportion as well, and that could be an impact to create more impact to the markets, the news and things like that. So here we've got Chris Williamson, for example, chief economist at Market, and then he's got his take on what is going on, stuff like that. Then you go downwards, you've got the flow of what's going on that may or may not, but most of the time may impact, news revolving the Brexit. Okay. So there you go. So a lot of interesting things as well. Brexit is an opportunity for second Elizabeth golden age, trade minister says. So you see, these are the things. But of course, if you've got like yesterday when or today, I think when Carney spoke and from the Bank of England, that's all actually mentioned here as well. Okay, so see, you've got some very interesting graphs and illustrations that may give you a better idea where we're standing with the pound, with the British economy and everything else. So you see, like this one here, UK car industry demands, that was 6 hours ago, help as sales fall, you see. So they may also mention some data releases as well, results of data releases, as well as speech and things that were shared by some big people in the UK or overseas or globally. Okay, so with the talks that are illustrated on the economic calendar but no results. I see, now I understand what you mean. Usually they are on, what you could do, the boho, is very simple. If you see the speech, not all would actually be featured straight away. Okay, would be featured as news, but some people like the ECB president or talks by all these big people, you can type their name. Let's say Carney speech. Okay, you could type their name and on Google and type it, whatever speech you see, and you type their name and you put in the exact speech, you copy paste the speech onto Google, and then you type the word live, L-I-V-E, at the end. You might find some sites that would broadcast it live. The same goes for ECB President Draghi speech, let's say. Okay, if you type ECB President Draghi speech on that day on Google and you type the word live, you might find some websites would actually give you a live stream of his speech as though it is happening on your news channel. Okay, so that you can actually see. So you can see it live rather than wait for the results of it. Another way to do it is to type it and then type it on Google and use the news tab, and you can then see what the results of that is. Okay, that's two ways of doing it to find the exact speech. And hello? Okay. So there are two ways to doing it, okay? So you can attend live or you can actually type it onto the news. Let's look at what speech is on at the moment. Economic calendar. Let's look at economic calendar today. All right. Let's say today, let's look at, have we got, yes, Wednesday today, July 6th, right? Yes, we indeed have got the ECB President Draghi speech, right? So, very easy. You go on to the ECB President Draghi speech live, all right? Then you may have some at the time, probably best is before, and that might give you live. Okay, that is one way to attend it. If not, click on news. All right, and then you could look at maybe not live. Okay, there you go. 8 hours ago, there you go. Console is above ECB Draghi eyed. Okay, ECB President Mario Draghi is scheduled to deliver. That's before, I think. I think it's not even started yet, is it? Let's just check. When is the speech? It's out already, probably. Yes, it's already done. That was this morning. So you're talking about that one, I think, Teboho, yeah? The President Draghi speech. So you can find that, or as I've mentioned earlier on, there are sites earlier on here. There you go. President Mario Draghi, European Central Bank. There's some recorded version there. You can actually take a look and you can listen it to yourself, you know, and see what he has said. And because the speeches are not, you know, it's live, so they don't actually post any speech. Are usually not having any sort of results with it. It's just the media will blow it out and sort of you know, shake the market with what they say. 7 hours ago, 5 hours ago, Euro trading ahead of the ECB chief's speech. So probably not not done yet, I think. Not sure. Friday preview. Let's see. Euro trading lower. All right. You can always do the you can always do what I've mentioned earlier on and just type ECB, probably just Draghi speech, D-R-A-G-H-I. If you have got time, it's probably best to watch it live, you know, as he speaks. Okay, and there you go, live TV Bloomberg. So you can always go into that one and attend it. It's probably a bit early maybe, and they may show it live there straight away, and you can then make your own judgment and write notes of what he has mentioned, and then look at how the how you call that, media stirs it around. Okay, so it looks like it's not even it's just not even there yet, hasn't even started. So if it is already there, then if it's live or has already happened, then you would see that feature there. Okay, all right guys, I think that's basically it for now. We have got, what about gold? Anyone would look into gold? Anyone looking at gold? We do have some resistant area, but it's expected to reach the 1400 area. But again, 1400 is a little bit too risky to just take that as your TP area on the dot of 00. So 1390 would be an ideal take profit sort of area. Okay, that next line up there, 1390. Okay, so that's basically it. That's for gold. Now we've got a lot of the equities market is it's looking like it's plunging. Okay, it's got lots of negatives in the equity markets. It's sort of bearish, so that is attracting a lot of safe haven move into gold. That's what's happening, and that's pushing precious metals prices upwards. Okay, but play around with what's going on, especially from time to time. Okay, with revolving Brexit, revolving the FOMC, and don't forget, we've got the NFP coming this Friday, which is the 8th of July. Okay, it's a big thing for traders, because traders have made that NFP a big thing. Okay, so it's going to be impactful, but for the US economy as well, we want to look at what comes after the FOMC. Okay, and today is I would guess the ADP as well for the jobs market before the Friday's NFP, so we can probably get a little bit of a hint, but again, in my opinion, it's difficult for a country like the States, being the biggest economy in the world, going through electorals and having a president waiting to be elected, to simply have their currency go down the drain, or having their currency really, really low and showing that the economy is bad, especially before a president is elected. So they might try their best to give you or traders the best possible news, stir it around the best possible they can, and then pull out the bad, big negative numbers out of the carpet after things in the elections have settled. It's usually the game that's played. So be careful on that side of things. So it doesn't mean that everything that's positive revolving the States or the dollar, it's because they're doing really well. No, it may be a little bit of sugarcoating from the political, political economic side of things. Okay. All right. Any questions, guys? Anything that you would like to look into? Now here I've got something about gold at the moment. So sorry, oil at the moment. If we go on to weekly, as you can see, daily. Okay, so it's gone. It's made that rebound. It went upwards. It followed that pattern very nicely in a W pattern. So we're looking at a turnaround downwards. Okay, that's the PRZ zone there, and it has actually visited that on the dot. That was a very nice ABCD part of the W pattern as well. Now that length equals that length, so we have looked at how prices have very nicely sort of made that turnaround within the PRZ zone now downwards for oil. Okay, so this is basically it. Now if you pull your from the C to the D, if you're looking at shorting the oil, then it's under that zone area, and you could aim at the 50 area, which is at the 43.50. Perhaps you want to take it at 43.60 as your take profit area for oil if you are shorting the oil. Okay, that's a short-term sort of take profit area, 43.60 for oil. So then, hi there, Raymond. Yes, sure, we could actually look into the GBP JPY as well. Now, GBP JPY has actually given some nice hints to the downside by Citibank. Okay, Citibank has actually given lots of room to the downside for GBP JPY, mainly because they are they've given a lot of, they have themselves, analysts have been given a lot of hints on the upside for the Japanese yen. So a lot of room to the downside for the GBP JPY. Now, how do you want to trade that? That at the moment, you would need to actually look at what's going on. You need to be sensitive trading this pair, not only because it's very, very volatile. It's a very volatile pair. It's actually the most volatile pair. Okay, it's called the Twisted Sisters for the GBP JPY. It's called Twisted Sisters. So imagine that name itself is, giving us a bit of a scary thought. Okay, so how do we trade that? Very, very good question. Let me just pull the that pair up first. Give me a second. GBP, JPY, there we go. And let's get rid of the grid lines. Let's look at what's going on now. Now, how do we actually trade this pair? We would need to be very sensitive with what goes on in Japan, whether or not there are any intervention. Okay, what's going on with the yen at the moment is that every just metaphorically speaking, you've got all the investors rushing into the yen. So the yen is appreciating, it's going up, and it's going up and going up, and it may go up a lot more, but this may pose a very big problem for Japan. So this upward move may or may not be stopping. We don't know that when it might actually stop, or whether or not it will just get a sudden stop by the Bank of Japan, the BOJ. So we need to be very careful. It may not be like today or tomorrow. It might be soon, but we don't know that, the word soon, how soon would that be? Maybe next week or whatever. So you would need to be very, very careful. You need to be careful with the news that's coming up revolving the BOJ, what they're actually saying. Are they actually giving hints of intervention? If they are intervening, then there will be a balance, there will be a pull down of the yen's value. Okay, so how do we trade that? You need to be careful with what's going on with BOJ's announcement, but again, you want to balance that up with the downward move of the GBP. Now, that is why it's best, one of the ways is to actually, we have got something happening live at the moment, press going on. Okay, let's just see that's with Obama at the moment. But with Guardian, for example, I've given that site. It's good to keep this site open, okay, because you've got live sort of coverage on the pound, okay, on Britain's condition and everything else, and that will give you a little bit of an idea how weak the current condition is and how much will the pound go down to. So that would then give you a bit of a balance to know what's going on in Britain and what's going on in Japan. What's going on in Japan, you can actually go onto Google and type yen or Japan economy or something like that to give an idea with what's going on. But for Japan, it's probably best for you to type BOJ or Bank of Japan, okay? Bank of Japan, like that, okay? And type enter, and then you click onto the news tab here, okay? Then look into latest news, looking at what they are hinting. Are they hinting some intervention or not? If there are not much news on intervention, then that may mean that it's just going into higher and higher, the yen, okay? But here on the 4th of July, here 14 hours ago, puts Bank of Japan policy in the back seat. Okay, what does that mean? Okay, give you a little bit of a reflationary drive. If you want to click on that one and check out what exactly he meant, whether all you want to know is whether or not you've got hint of intervention. If there are hints of intervention, that means they want to pull the strength of the yen down a little bit because it's hurting the exports, okay? But we just want to know by when they're going to do it. This is the most important thing. So that's Japan side. On the GBP side, you want to look at the strength of the economy and everything. Is it getting worse or not? If it is getting worse, then you know that the direction for the yen is stronger to the downside, and then there's no intervention for Japan, then the strength of the yen on the upside. Then you can short that pair. Okay, so you want to balance out that too, but you want to keep it in focus of what BOJ, Bank of Japan, is actually doing. Okay, so here look at all these inverted commas, all these speech and excerpts from what the governor is saying, the prime minister is saying, Abe is saying, and things like that. So this is what we want to look at. But if you look into GBP JPY as of now, go into the daily chart. Before anything else, look into the price itself. Price itself at 130, okay, 0.13. So I would think it's probably best for us to look into whether or not the 130 goes lower under the 00 area. That means 130.00, 129, 12990 and things like that. See whether it goes under that 130, 0.90 area and below. Okay, then we can see more strength. At this moment, I don't really see a potential pattern really giving me that, but here you've got on the daily chart, it's got a nice sort of flagpole pattern again. As I've mentioned this time around with what's going on with Brexit and everything else, there's loads and loads of flag and pole patterns that are emerging, okay, or forming. And here, if you're looking at, okay, how do you trade that with the pattern, then you want to measure again the length of that, okay, the body of that one there. Can easily take that from the highest point, so treat that like an ABCD sort of pattern, and you have got a area of 122 area for it to go further down if at all the GBP is weakening more. Okay, so that's basically what's going on with the GBP JPY, guys. But if you want a bit more confirmation, then you can always go on to GBP JPY forecast and look at what other sites are talking about or other experts are talking about the GBP JPY at the moment. So you've got daily effects here, for example, but click on news so you get the sort of latest one. 7 hours ago you got Action Forex talking about GBP JPY, but 56 minutes ago it says new JPM pound to euro exchange. Okay, there you go. 13 hours ago, APAC currency market pounds, the pound pounded, it says. Okay, about 13 hours ago. And this is giving us some hints. But again, like I've mentioned, you know, you want to balance up with what's going on in Britain and what's going on in the States. Give you a bit of an idea. Here itself, it's giving you some sort of hints with what's going on. Okay. But on the economic side for GBP, it has been downgraded, the AAA ratings, and a lot of things has been said by Carney, and it has been very much on the downside. I mean, sort of negative sentiments, you know, bearish sentiments for the pound. So once we monitor the news just very briefly, you know, from day to day, and we get more information or more signals that it is definitely strengthening the downside sentiment, then you know that the pound is getting stronger to the downside. Okay, this is the most important thing. We want to know the impact, the momentum of the bearishness or bullishness. How strong is it? You know, if you see it strong on one side and then the other side as well is strong on the opposite direction, then you've got a direction for you to trade that pair. Okay. pounded, it says. So you could see that here it's talking about the tumbling of the GBP, so that's giving you more news there. All you need to do is to balance that out with the Japan side of things. Okay, all right, hope that is clear on the GBP JPY. Silver is you know, appreciating. It's usually, like I've mentioned before, it's a shadow of gold, meaning that it would sort of mirror gold's movement, but a few steps back. So it would move slower than gold. It'll mirror the movement, but it'll mirror the movement slower, so a few steps back. Then once it does reach the point that it's supposed to go up, it'll go up usually much more than gold. Okay. All right. AUD USD, as you can see, I've mentioned it earlier on, as the same goes for AUD NZD too. You can see some appreciation already on the AUD versus the NZD, so there may be some political economic sort of benefit of Australia over New Zealand. So there may be some sort of negative news, a bit more in New Zealand as opposed to Australia at the moment. Okay, Australia's economy is doing quite well at the moment. So GBP JPY, as you can see, as I've mentioned earlier on, that's a downside. It's really strong. If we go into weekly, we've got stronger. As you can see, bearish candles are dominating, so that's a good sign to give you more hints to the downside for GBP JPY. Okay. All right, let's see whether I've got any GBP JPY hints from the banks. Don't have very clear ones at the moment here, but probably more on AUD USD. There's a support price of 0.7372 for the AUD USD. So if it goes down, you need to look into the 7372 area. Let's see. Yeah, USD JPY, one of the banks is talking about bearish. Most banks are bearish USD JPY. Okay, still, they're still looking at chances of it going to the 99 area, but it's not like a big expectation for a very big move for USD JPY, mainly because they wouldn't want to take too much risk in shorting it big time, expecting loads of returns, because they want to be sensitive with the FOMC and various other pending sort of top economic data releases and news as well. Okay. All right. Okay, Deboho is talking about some reversal pattern for the AUD NZD. Let's take a look. Let's look at what's going on with AUD NZD. Yes, reversal pattern. Okay, let's see. Potentially, yes. This is sort of like a M-like pattern as well. If we take that long move up there with a peak there based on that wick, then we have got, and we take that there, then we have got like an M-like pattern as well. We can always take a higher area here. Okay, give me a second. Right, that means we ignore the M-like pattern and just look into a ABCD type pattern here. Okay, that's the wick there. It's just like a spike upwards. So we just look at that AB and CD area here. If I grab that A from A point and go down to the B here, then I'm looking at a very sharp 88.6 area there. Okay, so that 88.6 usually would give me the D area here at 113 extension. So I pull that up there. So as you can see, it's on the dot of 113. So if you have traded or entered earlier to trade the downside of C to D, then you could easily be entering, let's say, around here, under this area here, downwards, right? And then you are aiming anywhere close here. So that's quite a significant, nice trade for the downside earlier. Okay, so yes, if at all you're looking at that ABCD, then you attach this move here, okay, that move there, right? Then you have got an M-like pattern, which also would signal a upward move for AUD and ZD. Okay, hence the reason you do have that upward move. Now, if I actually just mark what we had initially at 113, then the 113 is there. Okay, the AB equals CD was there. Okay, so that was the zone area where prices could have reversed, and it indeed reversed at that area exactly. Okay, so let us just look at that M pattern would then signify a upward move, and that's what's happening now on the daily chart. Okay, so there you go, you've got that upward move. Now if it does actually go upwards, where would it actually end? Or your TP area would be your C to D. Pull your C to D and you can look into two possible TP area, which is the 50% or the 61.8%. okay, between the two, right? So it depends how price and trend and sentiments would play out at the time, but that's your possibility. And you've got very nice big moves at the moment. Now you would like to also make sure whether or not that current bearish move have taken over previous resistance as well. So let's look at whether or not we have got any resistance area close to the current price. Now this is what we would need to look at. Okay, so have had loads of support and loads of support at that area where prices are at this moment of time. See, lots of support, okay? So let me just draw that line up. Just want to look at, okay, let's see some significant support area, loads of significant support area at this moment of time. So I'll just use this area here as you know, an area where I would like to draw the zone, so I got, you know, a bit of an idea to know where prices are at the moment. They're in between this line. So then you've got, as you can see, these are all these is where the support zones are, right? So have we found any, or could we find any resistance zone there? Now as you can see, you know, as I've pulled back, you've got more support zone, very significant, strong support zone, just based on where we have pulled it. And again, it's got more support zone. Okay, so that explains it. Here we've got some resistance, but it looks like there's some resistance here. You know, we've got all these longish candles downwards, but it does look like from history itself, it has, you know, here for example, significant support area. Price has actually found support, and then ever since then gone upwards, you know, to a certain degree, and that was since 2006 in February. Okay, so and then price actually appreciated quite a lot there, and we've got quite in a number of occasions it's got more support than resistance. So what that means is that if we're looking at prices now, that's the two lines that we're talking about. So once prices have penetrated through, now it does look like the bulls have got loads of power here over the NZD. Okay, the Australian dollar bulls are in control, but we want to be a little bit more sure of that control once it it goes above that zone and above the 1.0550 area. So it's probably best to wait a little bit more for prices to go above 1.0560 at least. So once it has reached the 0.560 area, it might then strengthen that zone or that area that I've drawn to a very significant support area, and then you can then start to long that Australian versus NZD and then take your profit before it reaches 0.860. So perhaps 1.0840 would be good, and you could see a significant number of pips to be gained from there. Okay, so that's basically how you trade your AUD NZD daily, based on the daily chart. Okay. Yes, I think I've drawn that already for you. The boho, is that correct? Yeah, that's your 50 and sorry, it's 50% and the 61.8%. That's your potential area. But this is what you're looking at the daily chart. You can always go on to the 5 minutes or the 1 hour and try to trade it in stages, but it does look like more dominance or control by the bulls or the buyers. But again, if you can actually wait a little bit more and wait for prices to go above the 50 at least, 1.0550 and above, maybe 60 and above, it would be a little bit better and safer for you to look into more dominance and control by the bulls or the buyers. Okay, is that clear, guys? Any more questions, guys, on other pairs that you're looking at, or you guys are quite clear at the moment? Hope you guys are ramming up the pips at the moment for various pairs. Of course, yes, it's a lot of risk, a lot of things to watch out for, a lot of unpredictable actions by the big boys and moves by the currencies and various instruments, but it also poses a lot of opportunities, a lot of big moves as well. So stay in tune with me as well on the live webinars on Mondays and Wednesdays especially. Okay, I've got one coming soon, I think today on FX Street. So if you go onto FX Street, at the very top you've got live videos, okay, and you can always click on the live videos, and I have one that is scheduled at 8 o'clock. I'll be talking a little bit about pro-Brexit and pre-NFP and giving some ideas and going through some of the pairs as well. Okay, and share with you some of the trade ideas as well. So if you guys are free, it's at 8 o'clock my time. Okay, it's GMT plus 3 my time here in Cyprus. So it's 8 o'clock Cyprus time at night. All right, tonight in 2 hours time almost. All right, so okay, I think that's all I have for you guys now. If you guys have got no questions, and I shall then wrap up here and see you guys again on Monday. Today's Wednesday. Yes, see you guys again on Monday on the live webinar, and wishing you guys great pipping of your trades. Okay, all right, have a very good evening, guys, and if I don't see you this evening on FX Street, I'll see you on Monday then. Okay, let's see, you've got a question or no? All right, no. Okay, good. Thank you, guys. Thank you very much. Bye-bye.